Hi everyone, Dennis here, and I thought it was time, right? About time I recorded another video for you. It was such a long time ago, so we're gonna try to make it more consistent. I make some videos of my own here to really try to transport the knowledge I have to you, of course. And obviously, whenever I do videos, I can only come from, it's not right nor wrong, it's only my own experience. So I hope it will give you some value. So in today's video and episode, I want to talk about the two major things that's really going to make or break your portfolio, which is diversification and asset allocation. So many people, what they do, right, when they invest, they think about it a little bit wrong. So if we start with asset allocation, what they do, if I just draw this, you might have seen Marcus draw this, but if we draw a scale of risk here. So if we have, if we look at this risk scale, then this here is a lot of risk, and here is a little bit of risk. So I'm going to draw this just in a way, so I think that everyone will understand this. So if we look at newly started companies, what do you think? Is it a lot of risk or low risk? You're probably going to say that, IPOs or new companies are very high risk. That is correct. And I mean cryptos, not to speak about cryptos, but a lot of cryptos are outside of that even. And low risk would be, for example, an ETF. And an ETF, we do have that in another video, but an ETF is really a basket of shares. So imagine you have the 30 biggest companies in the world and you can invest into all of them at the same time. That's quite low risk. And but what happens is, of course, it doesn't really move much. You might make a couple of percent, maybe 7% a year on average. Here, you might make thousands of percent, but you might also lose everything, right? And we do know for a fact that over 9 out of 10 companies do fail within X amount of years, like new companies. But the ones that succeed, they do really well. And then you can make a lot of money. We're all looking for that, getting rich quick. So that's the first lesson here. When you're diversifying, where do you think the most amount of money should go? Well, not here necessarily, but maybe to your Apple, for example, maybe to your Microsoft, maybe to your Tesla, maybe. Whatever you think is a really good company, but it needs to be big. So these companies you invest into needs to be global. Right? They need to be global and, of course, need to have many different product lines. Imagine if Tesla only had cars. It's a data company, they have cars, they have Bitcoin and cryptos. If they only had cars and their cars would just explode all the time, they would go to zero. And the same with Apple. They have computers, phones, iPads, right? All these different things. So really, we are on the sweet spot here. So that's when it comes to diversification. So make sure when you're investing that the least amount of money goes in here. So let's say we have a pot of 100%, right? That could be 10,000, 100,000, a million. But here in the IPO part, maybe you put 5%. Maybe, right? Because it's very high risk. But most people, they put 100% here, they hope for their best. But that usually does not play out. So make sure the higher the risk, the less money. Because you want to build wealth and cash flow longer term, right? Does that make sense? Comment below, what do you want to do? Of course, we want to make as much possible, as much money as possible. But in the words of Warren Buffett, our objective and our mission is not to lose money. We're not going to focus on how much we're going to make, because that's going to take care of itself as long as we're investing into good companies. And then over here, we invest more. So the further on this scale we go, the more money we can invest. So that's number one, right? Make sure you work with your asset allocations. You really divide your money in the right way. But the second part of this is then, of course, diversification. We need to be diversified as well. Because what do you think will happen if you invest into Tesla, into Apple, into Microsoft? Well, they're all tech companies. So if one of them goes down, the probabilities are, because that's all trading and investing is, that means that all of them are likely to go down. So we need to invest into different markets as well. So, for example, we can invest into silver and gold, right? Silver and gold, that's a good one. You can invest into oil, it would be another example that also usually moves in a different direction. And some of you might have mentioned it already, right? If you write below in the chat or in the comment area, other ones, you might come up with even more. But then, of course, cryptos, which we think are really good. And yes, you need to work with your asset allocation as well to divide the correct amount of money. But in this way, we have seen, depending on when you're watching this, when usually stocks go down, right? Stocks go down, and then oil, silver, maybe cryptos goes up. And then you can add to the list, you can add properties as well. So property, right? You can add that as well, property. So you can really divide your portfolio and build all of those legs. So if one asset goes down, the other one goes up. So that is really, really important. So that is how you diversify. So in your portfolio, make sure you maybe don't have more than 2 tech companies. Then you have maybe one mining company, one oil company, maybe a couple of cryptocurrencies. And in that way, you're hedged. And that's the third way as well. The third way, a bonus way, I didn't mention this in the beginning, but the bonus way is that you also hedge through different strategies. So maybe if you use, for example, our Buffalo, that's more trading, we buy and sell in the shorter term. So if you use the Buffalo, maybe the Slingshot even, then you can make money when the market goes down as well, and when the market goes up. So in that sense, it doesn't matter what happens with the economy, you will always make money, because you can make money both up and down. And then you have different kinds of investing strategies as well. That's also very important. So for example, what we do there, that's another video, but then we invest as the price goes down into quality asset classes as well. So I think that's pretty good, right? So that's a good nugget for you there, and hopefully these videos can really give you some nuggets as we go as well, so you can learn more and more. But one, then, to summarize, do make sure diversify your portfolio properly, and also make sure you allocate your assets, allocate your money properly as well when looking at this risk scale. So those are 2 very valuable lessons. No one really uses that, so if you start to use that, you know more than most people out there. So if you enjoy these videos, if you enjoy the content, make sure you subscribe, press the like button, and maybe even comment below as well. And so let me know what you think. What strategies do you use? How do you diversify your portfolio? I would love to know, so we can support you in the best way possible. And with that being said, have a great week, and I'm looking forward to seeing you in the next video.